What's good, everybody? Welcome to the Doe Show. This is actually an attempt to, this is a recorded version in a previous attempt from a live recording that we tried to do. With the hurricanes coming through, the power and internet is still a little bit wonky, but hopefully that's on its way to being fixed. I'm just happy to have power. Anyways, if you're watching this for the first time, my name is Dustin Tibbetts, financial advisor with Jazz Wealth, and we talk about your retirement, we talk about personal finances, we talk about anything that can help you with your dough here on the Doe Show. Usually it's a live show at 1 o'clock Eastern time each day. Well, look, the stock market really had a rough go of it over the last couple days. And so one of the things I wanted to talk about is how do you benefit from that, right? You always hear me say, like, you want the markets to fall, you don't want them to go higher. And what does that mean? So I want to go over it. Now, here's what happens. Inevitably, when the markets fall, people get fearful. And if you really think about it, like, let's stop and think about this for a second. Why are you fearful that the markets fall? It could be that you're not sure that you have the right investments, right? Because if you knew you had the right investments, then you wouldn't be scared whether the markets went higher or lower. It wouldn't matter. You could be scared that you don't have enough time until you need the money in that account. So for example, if you're close to retirement, it could be that you're worried that it will not recover until the time that you retire. That's understandable. So these are things that we can solve for, right? You can solve for the right investments. You can solve to make sure that you're on the right retirement track, and you can solve for having the right investments at the right time, assuming that you're close to retirement. So when you're investing for retirement or for a goal, fear is really the only thing you've got to conquer. If we can eliminate that with everything, and we try to, that's what we do for our customers, we just get rid of the fear, right? Because with maybe the funny stats and things like that we use, but it helps eliminate the fear. See, like, if you look at, what was it, October 10th closing beat video that we did, it was the most watched closing beat that we had in the shortest amount of time, meaning in a 24-hour period, it was the most watched closing beat that we had. Why? Because the stock markets fell aggressively. People were fearful and wanted to hear somebody tell them why. And I'm sure on TV they did well on that day as well. So think about it. It's why CNN, Fox, the other ones, NBC, MSNBC, and all those people, it's why they focus on the crazy things. Like the Supreme Court, that Kavanaugh guy. Is he really a bad guy? I mean, I don't know. I'm just saying, like, when you watch it, they make him seem to be a villain. Is it really possible that a villain, right, or someone who did those things they said he did, could have made it to that level? Sure. I mean, it's possible, right? It's also possible he didn't do it. We don't know. None of us know watching, right? So we can't make judgment on that. So it's fear, right? It's motivation. It gets you emotional to do something, right? And that gets your eyeballs glued to the screen, right? Think about it. Every time there's an election, how is it that every president we elect is the dumbest, like, idiot person, right? Or is not very smart or has a bad track record of things? How is that possible? Trump, Obama, Bush's, Clinton's, right? How is it, like, during the election, how is it that Hillary Clinton turned out to be such a bad person? How is it that Donald Trump could be the president and he's such a bad person, right? It's because that's what we're taught, right? That's the fear they put into you. It's just not possible. If every president is all of a sudden some bad person, then aren't we the bad people for getting that person elected, right? So that's just a political example. I don't like to get into politics, but you get the point, right? How is every president such a bad person? I find that fascinating. Like, different channels will tell you different things, but that's crazy, right? Anyways, let's think about it in a more different way where we're staying away from sort of the hot button topics. Let's say you're driving along in your car and you get a flat tire. Are you fearful? Think about it. Just stick with me here for a second. We're going to get into it. If you are driving along, you get a flat tire, are you fearful? Most of you probably say no, right? It may scare you when the tire pops or something like that, but do you all of a sudden go into panic mode after that? No, you pull over, right? You are either changing the tire yourself, you go grab the spare, you call a guy, he changes the tire for you. You might be frustrated, right? But you're not fearful. Why? Because you know how much the tire costs. You know that there's a spare in the background. You know the process that it takes to get the tire changed. It may be an inconvenience, but you know what it takes, so you're not fearful. Now, take the same thing. You're driving down the highway and your car just turns off and you're coasting. Are you fearful? Right? Hell yeah, I would be. You're driving down a highway, your car just shuts off. Sure, you can step on the brakes and pull over, and then the fear sets in. Why? Because you don't know what it's going to cost. You have no idea what the problem is. Most of us can't diagnose a car, right? So we have no idea what the problem is, which means we don't know how long it's going to take. We don't know if we need a rental car. We know we need a tow truck, but we're in the middle of nowhere. We don't know where the car is going to go. We don't know how long it's going to take to fix the car, right? There's all of these things that are unknowns. And so when it comes to investing, it's the same thing. When everything's going up, the car's running just fine. So you're going along, the market's doing great, everybody's making a little bit of money, you're not fearful. All of a sudden, whack, the markets fall. You don't know if you have the right investments. You don't know if you're doing the right thing, some of you. You don't know if you have enough time to recover, right? And so all of a sudden, fear sets in because you don't know the product, you can't diagnose the market, you have no idea what's going on, and that's where people get scared. So if we can solve those problems, which we do at Jazz Wealth, then you really have no reason to be fearful. And so people ask me, Dustin, if the markets recover 100% of all of their declines 100% of the time, then why does anybody ever sell? Fear. People sell. Yesterday, people sold, right? So they do that because they get nervous, they get scared, they don't know, fear creeps in, they sell, right? At the worst possible time, right? So we need those people, by the way, right? If you're one of those people that says, I'm not scared, I just keep investing, no problem. Well, we need those people to get scared. Not everybody can not be scared. We need them to get scared so we have people to buy from, right? So it's kind of a joke. Anyways, I want to give you a few things that you can do to benefit from a down market, provided that you know what's going on. Someone has educated you and told you the investments that you have are correct, or they're doing it for you, like we do at Jazz Wealth. So the first thing I want you to do is your weekly deposits. Right? Now, our customers are probably sick of hearing this, but if you're one of our customers and you're not doing weekly deposits, you got to do it, right? If you normally put $100 a month, let's say $100 a month into your retirement, which, by the way, do you know how much you're putting into your retirement? You should know the exact number that goes into your retirement accounts, right? It shouldn't be a random number. We help all of our customers figure that out. But anyways, weekly deposits. If you're going to do $100 a month, I'd rather have you do $25 a week. It changes nothing. Right? It's just a couple clicks on the website so that you can change the recurring time period. There's no extra fee, there's no cost, nobody charges you for that. So it's a small change over a 30-year period. If you go back 30 years from 2017, not 2018, if you go back 30 years, it's a difference of $30,000. And nothing changed. All you had to do was change your deposit smaller, which is easier on the mind, right? Every week instead of every month. Why is it $30,000 more dollars? Yeah, there's a couple extra times that you make deposits, but the markets go like this, right? Day by day, and then like the other day, they do this, right? And so think about what happens. If you're investing at the first of every month, look at the markets, at what happens at the beginning of the month, right? If you're investing every week, you're buying some of these dips. Some of my customers got real excited because they got to buy yesterday and today in this stock market dip. So by you doing weekly deposits, you're lowering your average cost, right? So let's say here, I'm going to just use an example of $200, right? And then this is $250. And let's say this is $300 and this is $400, right? And so if you're buying once a month, right, you might buy some dips, you might buy some rallies. But if you're buying every week, you get a little at 200, you get a little at 195, you get a little at 225, you get a little down here, back again at 200, and so on and so on. Your average cost is now down here, right? This becomes your average cost line. Whereas if you're buying every month, your average cost can be a little bit higher. At least if you go back the last 30 years, that's what you find out. So that's one of the biggest things. Do weekly deposits. It takes nothing to change it, right? But theoretically, it benefits you, right? Statistically, if you go back, that it only benefits you there. So that's what I want to point out there. Number 2 is your average cost. We started on this here just a second ago. So what does an average cost mean, right? Well, before I kind of get into that, I've said this numerous times. I've spent years, I've taught thousands of traders all over the world. The key word there is traders. So we teach traders to average up. We teach investors to average down, right? If you're a trader, you want to buy a stock, see it move higher for you a little bit, add a little bit more, see it go higher. Oh, cool. Add a little bit more, you hit your profit target, you get out. if you're a trader and you buy and then it drops and you buy a little bit more and you go, well, that's not good. And then you buy a little bit more, oh crap, that's not good. That's not good, right? We don't want to average down if we're traders. We want the profit. We want something to prove that it's successful, add to it, prove that it's successful, add to it, hit a profit target, right? That's the mindset. An investor, we want to buy as much as low as possible. We want the stock market, right, to be down here while we're building our position and then take off. Right? Why? Because your average cost, like I just mentioned again, you got a little at 200, little 250, little 225, little 190, and then like yesterday, a little bit at 100, right? A sharp drop there. We want your average cost to be built on the lower end here and then start to rally over the long term, right? Makes sense, right? So number 2, you win when the markets fall because you get to build your average cost at a lower price point. So if you're making weekly deposits and the markets start to fall next week, you're soaking up that discount. Anything else on the planet, if you had the chance to buy at a discount, you'd say, yes, sir, let's do it. Anything, right? That's how it works. But for some reason in the stock market, we only want to buy on the way up. Traders buy on the way up. Investors buy on the way down. It's not going to feel good. I'm going to be honest with you, whether you're one of our customers or you think I'm just out there doing a sales pitch thing, that's fine. It's not going to feel good when you're buying on the way down or averaging down. Promise you. It does not look good. Your account's falling. You're like, am I doing the right thing? Fear. You got to stick with it. Okay? Build your average cost lower and then let the markets rally. Now, there's something we used to say. I'll go with number 3 on this one. And this is sort of blends into the second one. You want to build your size lower, okay? Over the length of time while you're investing, you're going to have little points where the market does this. Maybe it goes higher and then just sits there for a while. You ideally want to build your size while you're lower. Every week you're making the deposits, you're averaging down hopefully when the markets fall, or like this week so far, you're averaging down, and then you want it to stay there. The only sort of crappy part about what happened yesterday was that it all fell in one day, and that doesn't help anybody. If you go to the last time the stock markets fell this much, it took over 2 weeks for it to fall that much. That's kind of nice, right? Ideally, we'd like it to spend a long time lower, pressured down to the downside there, so you can build your size. Every week you're buying at a lower price, not necessarily a declining price, but that you're buying at a lower price. So if it was at, say, 200 and now we're at 100 in our hypothetical example, you want it to fluctuate around 100, 105, right? 99, 105, and so on, so that you have time building that position. You want to build a big old chunk here, every single week, right? So that your position is now much larger. Imagine if you're buying shares, right? So you bought 100 shares, 100 shares, 100 shares, 100 shares, so on and so on and so on. And you leave here with 2,000 shares now heading higher. Now we're talking, right? So those of you that have a long time until retirement, you don't want the markets to go higher. I promise you. I'm 36 and I want the markets to go lower. I understand the stress that might bring on. I understand how concerned customers may get. I'll walk them through it. I promise. So when we have this here and we're building our size, let it rally then. Because if you only get to buy, say, 100 shares here and then it takes off, you're like, oh, man, I'm not making that much money. But if you got to build 2,000 shares, let's say, then it takes off, now you're talking, right? Now you're excited. That's something we can cheer on, and you've got this big pile of money growing much, much, much faster. So that's another way you win when the markets fall. Nobody thinks about that. Everybody's busy looking at the headlines. Everybody's busy freaking out because they don't know what investments they have. Every one of our customers knows that how fast they're moving is appropriate for where they're at. They may want to even go a little faster. We'll always start slow. Okay? So everybody knows I'm right where I need to be. The markets fell today. Hey, man, it's part of life. It's going to happen. I know I'm right where I need to be. I know I'm contributing what I need to contribute to get to my goals. I get it. There's going to be ups and downs. They're totally cool with it. And so a guy commented the other day, boy, he looks awfully calm for having the markets fall. Right? I thought I sounded excited. Right? I was excited that the markets fell. I was sort of mad that they fell real quick. But I get excited by that. To me, this is motivating. I'll make more videos if I have to when the markets fall because it's more exciting. It means we're getting a discount. It's the only place on the planet where people get a discount and complain about it. Where else do you complain about getting a discount? Nowhere, right? You go into the store, this happens to you, I know this has happened to you. You go buy something, this is a coffee maker or something, and it says it's $200. You get to the register and they go beep, and it goes $149. And part of you's like, should I say anything? I don't know, man. But it's a sale. You just didn't see that it was on sale. You don't complain, right? You feel bad because you're like, am I ripping off the store? Should I say ethically? Should I do something? No. You don't say anything, right? Because it's a sale. In the stock market, markets fall. Nobody goes, whoa, good deal, man, right? I have occasionally customers that go, should I put in more money, right? And that's up to you. But the idea behind getting a discount, the idea behind being consistent, the idea behind building your average cost at a lower price, when it happens, you soak it up. You enjoy it. Take off the Dustin Tibbetts Jazz Wealth financial advisor thing for a moment. I'm just Dustin Tibbetts, a guy that follows the markets. Let's just say that. I'm still going to say the exact same thing. Me personally, not as an advisor, as a human, just an individual U.S. citizen, I love this. This is what you live for. Now I'm 36. I got a long time till retirement. If you're 58, right? If you're one of our customers, we've already put you where you need to be. You're already prepared. But if you're getting close to retirement, this doesn't apply to you so much. This should make you a little nervous when the markets fall, understandably, But then again, you should have the right investments. You should know where you're at. How far are you going to get hit if the markets fall? Anyways, that's all I have for you. Sorry couldn't do this one live. I see the power trucks everywhere, and the cable guy is just out there. We have a cable guy coming to our place, actually. So we'll hopefully have it all fixed soon, but still wanted to get this out to you. Enjoy. Hopefully we can do the live show later, and we'll talk to you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.